At the time of this recording, QFIN is currently selling at the price of $22. QFIN is a stock of 360 Digitech Incorporated, and the company was founded back in 2016. 360 Digitech is a data-driven, technology-empowered digital platform. Through its platform, the company enables financial institutions to provide better and targeted products and services to a broader consumer base. The company also offers standardized risk management service in the form of SaaS modules to institutional clients, and their system is pretty neat. 360 Digitech's core production is an affordable, unsecured digital line of credit that borrowers typically utilize for consumption spending and often as a supplement to credit card debt. In order to apply, potential borrowers complete a simple online application, and for approximately 95% of recent credit applications, a fully automated credit decision is rendered. Approved borrowers are provided access to funds typically within 5 minutes and may select the loan structure best suited to their consumption needs. The company's value proposition is an intuitive platform connecting its borrowers and funding partners. The 360 Digitech borrowers tend to be young with demonstrated credit histories. The company's value proposition is further magnified by the repeat lending and cross-selling opportunities that it provides to its funding partners. 360 Digitech has developed a proprietary technology platform supporting the full transaction lifecycle from credit application through settlement. The brevity, simplicity, and speed of the credit decision process reflect the strength of the company's data analysis, particularly around identifying fraud, which represents approximately 50% of bad debts industry-wide according to Oliver Wyman. For instance, the company employs a robust and highly automated identity authentication process based on facial recognition to filter fraudulent credit applications. Furthermore, the company's advanced analytical capabilities help to translate data into actionable insights, where it has found statistical significance leveraging behavioral and social data sets to assess a potential borrower's ability and willingness to repay a loan. The company was formerly known as 360 Finance Incorporated, but it changed its name to 360 Digitech Incorporated in September of 2020. The company was founded back in 2016 and it's headquartered in Shanghai, the People's Republic of China. The company currently has over 1,600 employees working for them. Pretty good. So, that's all for the information about the company. Now let's talk about QFIN and the company's statistics on the stock market. The company first joined the stock market back in December of 2018, and since then, the company has grown quite a bit. QFIN, at the time of this recording, is currently being sold at a price of approximately $22, which, according to Simply Wall Street, is a really good value, considering it is trading below fair value by more than 20%, with its fair value being at $112.92. If you buy QFIN at $22.02, you can get an exit target of about 44.04, which is an exact 100% return on investment. If we talk about the company's returns, QFIN exceeded the U.S. consumer finance industry, which returned 82.4% over the past year, and it also exceeded the U.S. market, which returned 31.5% over the past year. If we talk about the volatility of QFIN, then things are not looking pretty good. QFIN is more volatile than 75% of US stocks over the past 3 months, typically moving plus minus 14% per week, which means it does not have a stable share price. But if you just focus only on the volatility, then QFIN's weekly volatility has been stable over the past year. But obviously it is still higher than 75% of US stocks. According to Simple Wall Street, QFIN has a PE ratio of 4.1 times, and it is considered a good value considering the fact that the US consumer finance industry average is 7.8. Now in the market, QFIN is again considered a good value because its PE ratio at 7.8 is less than the US market value, which is 17.5. The price to earnings growth rate of QFIN is also considered good, with a value of 0.3 times. The PB ratio of the company is 1.7, which makes QFIN overvalued considering that the US consumer finance industry average in mind, which is 1.6. In terms of future growth, the company is expected to grow by 12.3% in the coming 3 to 5 years, and this growth rate is way more than the savings rate of 2%. The company saw a very bad year on the earning basis back in 2019, but ever since 2020, the company has had a stable and increasing graph of earning, and the average growth rate over the past year is 140%. However, there are some downsides for the company's future potential. QFIN's earnings are forecasted to grow slower than the US market average, which is 14.9% per year. QFIN's earnings are forecasted to grow 13.42% per year. QFIN's revenue of 9.8% is forecasted to grow faster than the US market. QFIN's debt-to-equity ratio is considered satisfactory, that is 2.7%, and the debt is well covered by operating cash flow. However, there is insufficient data to determine if QFIN's debt-to-equity ratio has reduced over the past 5 years or not, and the current market cap of the company is US $3.313 billion, and the outstanding shares of the company are found to be 152.40 million. Overall, we have no position in any of the companies mentioned. This video is general in nature. It does not constitute a recommendation to buy or sell any stock, and we do not take account of your objectives or your financial situations. We aim to bring you long-term focused analysis driven by fundamental data. Well, that's it for today, guys. We hope you enjoyed the video. Thank you so much for watching until the end, and as always, don't forget to like and subscribe. See you guys next time.